I think the higher tier is really worthwhile because with more frequent reviews and more frequent increases in the amount of capital of the companies that I would be allowed to trade, I think that value exceeds the cost. I was really excited about traveling out there to the office to trade in person and get educated in person. And I was really excited about the one-on-one sessions. When I first started and I learned a trade plan that was a scalping strategy to make 3 pips, and it had a high win percentage. Against better recommendation and suggestion from some of the educated people that were teaching me, I tried to use massive size in utilizing that plan. And there was nothing wrong with the plan. The back testing didn't change, but just in using abnormally large size, getting filled inside of the pip down to the point proved challenging and kind of made the plan come apart a little bit. That plan worked with large size in Forex on longer term trades, absolutely. But trying to catch a 3-pip movement and get out down to the point with a large amount of capital was hard. Because of that, I started to look to other instruments to trade. I got really excited about options because of honestly, the volatility of them. I would say it's important for me when I'm trading those to size most of my trades for zero, as if like my stop loss is essentially this trade becoming worthless. But in doing so, the percentage gain I'm able to achieve using the indicators that are based on the indexes while trading the instrument options is sizable. And I've even used them to trade futures with leverage. I like that a lot because similar to Forex, stop losses and take profits can be directly correlated with price on a chart, whereas options have a whole another plethora of challenges on how they're valued. Yeah, the SPX index indicator is primarily what I focus on. They work on all the indexes, but I use the SPX indicators to trade SPX options primarily. I use them to trade futures as well, and leverage contracts of futures. And even though it's on SPX and not ES, the S&P Mini 500, the correlation, how they move is pretty similar. The price points will be different, but if you're just using like the trade ratio tool to enter and exit a trade, you will still make money. The big aha moment for me where trading began to click, I'm still waiting for it, a version of it, but I definitely had many of them throughout my coaching. I think the biggest one that occurred is when it came down to backtesting. And when I saw how DTU specifically educated me on how to backtest and that I needed to be trading with an edge, when I did my own backtesting and I grasped that concept, I saw factually in front of my eyes that if I was disciplined enough and if I followed these rules in this setup, I will get these results, and I can go back 4 years, 10 years, 2 years and test a trade plan in the setup and figure out what percentage of the time is it winning, and from that derive a risk to reward ratio that will be a positive equity curve over time. When I learned that kind of opened my eyes and I thought, oh my gosh, that is how people do this. That is how hedge funds do this. That's how trading floors and prop firms manage, the traders on their floors. They make sure that they have an edge. And if they are struggling, they work with them to identify it and develop a plan. And all of it after that comes down to execution. I would say that's my next biggest growth edge. I'm not bad at it by any means, but I think there's always room for improvement there. But the biggest aha moment was seeing the proof and the math behind being able to make money as long as I understood the plan and followed the rules. I developed a belief that really all it takes is one. If I have one strategy that I can execute perfectly, I'm better off than having 10 strategies that I can execute at 50%. Yeah, I think the value that came from the Trader Summit was the community, realizing how many other people there actually are pursuing this path, because it can be a lonely occupation unless you get involved with the community. It can be really challenging, and accountability is huge. There's even groups I'm in from DTU with other traders that talk on a daily basis. The accountability is important. When it's just me alone behind a button that I can click impulsively without a plan, without rules, that's not valuable for my edge and my experience. But when I'm around other like-minded people and we talk about charts and technical analysis and levels and different strategies, I think that's really helpful. So seeing the community come together and how many people were in there that were more experienced than me, and I got to meet people that were maybe less experienced, it was cool to see the path that everybody was on. So I've actually participated in quite a bit of education outside of DTU. And when I had a close friend of mine, I actually sent him to Bob when he was interested in it. I told him he should do the light program. The reason I did that is because what I learned with DTU was absent from a lot of other places. I received education on other places, had neat snippets, but the level of education, the one-on-one time and attention, the back testing, the math that goes behind everything, and just gaining that as a skill was like teaching me how to fish rather than blindly following some signal and getting, slaughtered, or because that was never interesting to me. I wanted to learn how to read charts myself, how to come up with a plan, how to test it, how to identify an edge, and how to test that in execution before rolling it out in a live account with actual money. I think I've not been a part of another school, and I even did a couple short, cheap ones after DTU just to see what else was out there, and not a single one of them touched on a lot of those topics. I think some of my goals would be the management of long-term capital, which is very different than day trading. For me, every day I'm settling cash. I don't care what I'm trading. I don't care what direction it goes. And given the current market environment, that was actually why I wanted to pursue that. Because traditionally having some capital and selling businesses like I did in the past, just sticking that with the money manager is going to charge me a percentage to identify a plan that seems decent in returns for the next 5 to 15 years, and they'll never move it around or touch it. And charge me for that was just not attractive. So I'm not using like massive amount of money to just day trade and scalp, but I literally can make more day trading and scalping with a 20th of the capital I have than I can make in a long-term portfolio, just letting it sit there and go back and forth and back and forth. So the risk versus reward is actually, trading is incredibly high risk. I don't want to sell that inappropriately, but I could risk a 20th of the capital that I would need to make the kind of returns I do with some kind of long-term money manager or dividend portfolio or bond ladder or whatever you want to call it. So that's what's wildly attractive to me. And you don't have to start there too. The mistake I made is I had capital coming into this. I was already financially free. And that actually wasn't great for me because I had an ego and I had to get humbled and I had to realize I don't know better than the market, no matter how bad I want to try or how much capital I throw at it. But being able to realize that I could make sizable returns with substantially less money, that opened my eyes for sure.